Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Hello, good morning, everyone. Welcome to Wealth Coffee Chats. Hope you're well. Good to see a couple on already. We've just got ourselves started. I'll do the quick intros as we always do, but thanks for joining. If you're here already, great to see you, folks. For those who might be joining us a little bit later or watching the replay, great to have you here as well. Love to have you on the live one of these days, but if it doesn't work from a time point of view, it's always good to watch the replay. Jason Witten's my name. You might already know that. That's great. And if you don't, now you do. There you go. Welcome to the show. Each day we get together, talk about property investing and investing in general, the markets, the media, the mayhem, things that are going on out there in the world of investing. And we think, checking in bit by bit, day by day, just for a little bit, keeps you on track. We've got a couple of sayings around here. The idea when it comes to property investing is it is a marathon, not a sprint. It takes some time, folks, to build that property portfolio that does its thing. And hey, you should buy well and don't sell. That's what we say. Unfortunately, some people don't listen to that advice, which is frustrating. Had a client I just had a bit of a chat to. They owned a property for 12 years. It didn't do what they wanted it to do. They sold it, and over the next 4 years, it doubled in value. Crikey. Do you know what I mean? Hang in there, team. We always say 15 to 20 years for a property cycle for doubling in value wherever you are when you buy a decent quality property. And yeah, be prepared to own that damn thing for 15 to 20 years. If you're not a property investor. You might be a property trader. You might be a good time Charlie. But you're not a property investor. Anyway, ranting already this morning. Good to see you, Bunty and Alison. Good morning. Great to have you here on the show as always. Fantastic to have you along today. Hey, I thought I might talk about something that's pretty interesting when it comes to the world of investing. And just recently, the team, Sam and the Positive real estate team, have launched a property deal that's got $200,000 plus of what we're calling instant equity, a significant discount off of a certain price. And, the deal's good. The property's amazing. It's in a great location. But I thought I might talk about the mechanics today of that idea. When you buy a property at a discount or you create a discount, what does instant equity mean? How does it work? What's the mechanics? How do we analyze this stuff and find out whether we got a deal or not when it comes to the world of property investing? So let's talk about that today. Let's talk about discounts. Let's talk about discounts. Anyway, don't start singing, Jason. That's terrible. Right, let's talk about discounts. Let's talk about what we're up to in the world of, there we go, get rid of that bloke. Let's talk about discounts when it comes to the property market and how we can analyze or, think about that when it comes to our investing. Listen, I've been investing 25 years. We're at Positive. Me and Sam have done over 10,000 property deals with our customers. And along the way, we've done a significant amount of discount deals. Just after the GFC, we were doing discount stuff everywhere, significant. Majority around Sydney and Brisbane. But, folks, it was pretty cool. We think there's a little bit of discounting going on. Melbourne right now for some developers is a bit of a struggle, and we can get some discounts in those deals. What does it mean? How does it work? Let's talk about that this morning. Well, there's three versions of a discount, or when we're looking at a property, when someone might say, this property is at a discount or under a certain understanding of valuation. The first one is a market valuation. Put it in the chat for me, folks, if you want to play along. Market valuation. What does it mean by a market valuation or a market val? Does anyone want to put that out there? Well, the market val is properties that are selling, properties of similar properties that are selling in the market today, right? So, there's a house around the corner sold for $400,000 more. These property market or under market valuation or market pricing is usually given to you by the real estate agent. The real estate agents, they say, all right, a property around the corner sold for similar. A 4-bedroom house sold for 1.2. You can pick this one up for 1 million. They're pretty. There's no difference to them. That means it's under market value. So it's a selling discount. Okay, against the market price. Now, that's fantastic if you can pay less for something that someone else is paying for, and there is some market evidence, then you've got a market discount. Okay? The only people who realize that or acknowledge that are you and the real estate agent. Okay? So does the market valuation or the market discount mean anything to us when it comes to using it, calling it instant equity? Well, maybe. But, equity is an expression of a finance, folks. And we'll talk about that in a second. Equity is an expression of finance, ability to have access to equity. And we'll talk about that in a minute. Right. So that's what you can do. A market discount. There's other properties selling close, property similar, and the real estate agent usually says, yep, that's what's going on. All right. A discount undervaluation. Now, who gives these valuations, or who says who says bank valuations, drive-by valuations, property valuations? Who does those? Most of you should know this already, but that's the valuers, okay? The valuers. And who do the valuers work for? Folks, they don't work for you. Who do they work for? Put it in the chat. Who do the valuers work for? When they go out and go to a property or drive by the property or don't even go anywhere near it, just have a look online, depending on the loan to value ratio on that property. What do they do? Who do they work for? The valuers work for the banks, okay? The valuers work for the banks, and the valuation is used. That's right, Nintendo. The banks, the valuation is used. Yeah, they work for the lenders. Correct, Alison. The banks use the valuers to work out what they are going to lend you when it comes to that property. Now, the property, they're working out the loan to value ratio, and of late, maybe the interest rate they're going to charge you, okay, as they're going along. Now, what would be lovely, what would be fabulous, what would be amazing if you got a discount and the property was selling for $1 million, you bought it for 800,000, and the valuation was $1 million, and then you could borrow against the valuation. That'd be wonderful, wouldn't it? That'd be wonderful. But you know, the banks, they're pricks with a capital P, and they've got a little saying in their neck of the woods. No, we'll lend at the valuation or the purchase price, whichever is the lesser, whichever is the lower, which I think is a crock of shit. You know, they'll happily inflate the valuation for on their books so they can use securitized lending, but they'll deflate it for you so their loan to value ratio on their book makes them look a lot safer. Absolute arseholes. But anyway, that's the way it is. That's the way it is. You know, you can't complain too much about that because we can't change it. We just got to know the rules. You might get a valuation more than the purchase price, and you think, I've hit pay dirt with K dirt. But no, you can't use it for lending purposes at the purchase. All right. That sucks. Now, it's a bit different in the world of commercial industrial, actually. So you can do it over there, depending on what you're up to. But, you know, we're not talking about that today. So market, real estate agents, valuations, banks and valuers. And then we've got the good old, what we call the per square meter. Now, we like the per square meter in the world of new properties because it's quite difficult to analyze. Are you getting a discount on newer properties? Because often a newer property doesn't have a lot of comparison or properties that are similar. The valuers, if it's, let's say it's in an apartment complex like this one in Melbourne, you know, I think there's 30 or 40 other apartments in that complex. Well, they haven't been, there hasn't been a second sale yet. Okay. Now the valuers, again, assholes, they won't take the initial sale on a new property. They'll take a second sale, right? Again, absolute bullshit. But that's just the way it is. We've got to roll with how it is, folks, don't we? We've got to roll with how it is. So the per square meter rate of producing a property is a really interesting way to look at it, because with the per square meter, you can see vast differences in the property values. Okay, so this is the valuation. The value is doing it over here. This is us finding out the sale price and dividing it by the size of a property or an apartment. Okay, now per square meter is the total size of the property on the title. Okay. On the title. So because why is it the total size of the property on the title? And let's just use the one in Melbourne as an example because it's fresh off the press, right? The property is 100 square meter internal and let's say a 10 square meter car park. So it's 110 square meters, okay? Now, the car parks often are a little bit different in value with you go, you know, an apartment is 100 square meters. It's got a different value than a car park, but you know what I mean. So let's say it's 110 square meters. 110 square meters, right? So if we go along, we say, all right, well, if we're paying $1 million, right? If we're paying $1 million on that, I could probably do this off the top of my head, but I won't try. Divided by 110 equals it's $1 million. Divided by 110 square meters gives you 9,090 a square meter. Okay, 9,090 a square meter. Okay. Now, what we do in the per square meter, this is what we do as investors when we're researching and understanding, am I getting a deal, right? How do I quantify? The real estate agents have got, good ones, have got much more live access to property data than you have as an investor. You're like, fuck, how do I match that? Well, you do a bit of research, you look on realestate.com, whatever, but these guys are on the ground all day, and if it's a good one, they're pretty accurate. The banks and the lenders, now they've got access to data too. They pick and choose the data, but they probably got access to better data than you have. Well, how can we check in on, are we getting a deal, right? So this is how we do it. We check in on the per square meter, right? 9,090, right? Even at $1 million, those properties are very good value, because right now we know, and this is where you can go and have a look at anything brand new being sold in the area. You ask the seller, hey, give me the what's the price and what's the size, and we know right now in Melbourne, anything new, anything brand new that is being sold off the plan into the future right now, is selling for 14,000 to 20,000 a square meter. 14,000 to 20,000 a square meter. Absolutely, it's setting a new price point. It is what it is. That's the cost to deliver those properties. A lot of them are better quality now, like the lesser quality things can't get out of the ground. So even here, this one here, the reality is what's happened is we've been able to secure that for 800,000 because there's been a pretty significant discount even on the going rate, which is quite low. So you've got an 800,000, 800 grand divided by 110 is 7,000 a square meter. 7,272, right? So even against its own market valuation, it's a discount. Now, will the banks come in and agree? Well, this is where it can get a bit tricky. We know for a fact per square meter, it's good value. All right. So let's go and have a look at how it might work over here when it comes to this world. So let's say it's on the market for $1 million. You can buy it for 800 grand. All right. So you got the discount, market, purchase, you're winning, right? Now, when the bank comes in, what are they going to loan against? What will they loan against? Okay, they will only loan against the 800,000, irrelevant whether the market price or a valuation comes in at that. Okay, irrelevant, completely irrelevant. Okay, they don't care. They don't care. Yeah, Alison. Yeah. And 11,000 was like, oh, gee, that's pushing the envelope, right? But construction costs and certainly medium to high density sites are very difficult to make work in all the capital cities. So you got a discount. You got what are they going to loan against? 800. So you might get a loan from the bank of 700K. You might have to put in 100. I'm just using round numbers here, folks, right? And then that's your deal. It's done. You've got to do some stamp duty and whatever, but you know the drill. You can work this out more accurately. I'm showing you the statistics, right? So can we get access to our 200K up here, which is our instant equity? 200K. Can we get access to our 200K and release our 100K? Right? Can we do that? If you put 100K in, can you get it back out? And the answer is yes, you can. So how does it work? Usually after 12 months, if you purchase the property, after 12 months, you can send a valuer in or you can get your finance team to do a valuation on the property. Now, with these types of properties, again, remember, the valuer looks at the second set of sales, not the first set of sales, okay? Which is a pain in the ass. Technically, you can do it after 12 months, but probably it's going to take 24 to 36 months to flow through, okay? So let's call it 36 months, right? You go back and you go, right, yep, my valuation is $1 million. I'd like to borrow at 80%, please. My loan is 700. So I can top my loan up to 800. Right? Got my $100,000 out. So roll my $100,000 out. This is recycling your equity. And you can go to another deal. Okay? So the growth in Melbourne will probably be flat for a couple of years. We all know that the market, the Melbourne market's been suppressed a little. The other night when we went along to Dr. Andrew Wilson's stuff, he was talking about, hey, Melbourne's so undervalued, it's not funny. We all know that. Anyone who's got half a brain knows Melbourne's undervalued. It's got a confidence issue and a politician issue, not a fundamental issue. Created the most jobs in Australia last year. Good average incomes in Melbourne, great lifestyle, etc., etc., and the lowest median house price in Australia, folks. You know, it's got a lot going for it. So what happens? You've got your instant equity. You have to wait 12 months, probably 12 to 36 months. You can go back to the valuer. You can say, I want the lender or the bank, I want a new valuation, comes in at $1 million. You cycle your money out, 100 grand, away you go. Anyway, did that make sense? Hopefully it did. When it comes to having a look at discounts, there's 3 bits. We analyze the market, we look at the valuation, and we look at the per square meter, okay? And that's how we do it. There you go. If you're in our coaching mentoring program, I know there's been a couple of emails out. Yeah, there you go, Alison, for sure. Fundamentals. And listen, you know, it's a long-term journey, folks. You know, I just saw a couple of messages in some of the chats. You know, we all invested in Melbourne over the last few years. You've got, you know, and people go, oh, what's my thing worth now? Well, maybe it's worth a bit more. Maybe it's worth the same. Maybe it's worth a bit less because of the valuers, whatever. And at the end of the day, folks, that's irrelevant. You've purchased a property that you're happy to own for 15 to 20 years. That's the point of it, okay? You know, that's the point of investing. It's not good time, Charlie. Oh, is it up, down, or sideways today? All right. So if you're feeling a bit wobbly, reach out to your coach, get some support, because, you know, never have I said, yeah, you know, you buy a property and and the moment it goes up, down, or sideways, you either sell it. You know, nah, that's not property investing. Anyway, don't be a good time, Charlie, and regret not following your bloody plan. All right, stick with it, folks. Anyway, there you go. I think I'm just rabbiting on now. Anyway, that's it from me today. Wealth Coffee Chat done and dusted. Thanks for joining. As always, awesome to have you here. Join us tomorrow. The finance team are going to be on tomorrow. I'll talk all things finance as they do. So make sure you jump on and join them. But that's it from me, folks. Good to see you. Thank you. See you on Monday next week for me. Friday tomorrow for the finance team on Wealth Coffee Chats. And away you go. There you go, folks. Take care. Bye for now.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the